Summer is flying by, and
Do you know what that means?
crypto's second quarter reports have landed, packed with data you simply cannot afford to miss. We've got everything we need to answer crypto's burning questions. Can Bitcoin sustain its dominance surge? Did Ethereum finally catch a break? How did DeFi fare after Trump's crypto-friendly policy shifts? And are NFTs truly dead? Well, today we'll be covering all of that and more, so buckle up. My name is Louis, and you're watching the Coin Bureau. The report we'll be summarizing today is titled, quote, 2025 Q2 Crypto Industry Report. It was authored by CoinGecko, and as always, we'll have a link to the full report in the description below. But don't worry, because we'll cover all the highlights right here in this video. Now, CoinGecko should need no introduction, but if you're new here, it's one of crypto's most trusted resources for real-time market data, token trends, prices, volumes, really anything, you name it. And CoinGecko's expert research team compiles quarterly reports breaking down key market trends and critical events. We read tons of these reports, and CoinGecko's constantly stand out as among the best. That's why today, we're bringing you all of the important insights from their latest edition. Now, the report kicks off with a look at the overall market landscape, and Q2 certainly provided plenty to talk about. After taking an 18.6% nosedive in Q1, crypto's total market cap rebounded sharply by 24% in Q2, reclaiming a healthy $663.6 billion to end Q2 at $3.5 trillion. This effectively wiped out Q1's losses, bringing markets back within touching distance of year-to-date highs. But surprisingly enough, trading volumes told a different story. Despite the price recovery, average daily spot trading volumes continued to shrink, dropping another 26% quarter over quarter to just under $108 billion per day. Clearly, market participants weren't feeling quite as enthusiastic as the price charts might suggest. The report then zooms in on the top 30 cryptos, highlighting some intriguing movers. Most notably, Hype surged substantially, climbing from 27th all the way to 11th place by market cap. And if you're curious why, we've got a dedicated video on Hyperliquid right over here. Another interesting standout was Bitcoin Cash, which managed an impressive climb from 23rd to 12th place. But not everyone could enjoy the rally. TON dropped sharply from 11th to 19th, and DOT slipped from 21st down to 28th. Meanwhile, Aave and Pepe found their way back into the top 30, taking the spots previously occupied by Pi and Ohm. Regarding crypto dominance, Bitcoin continued to flex its muscles, gaining another 3 percentage points to close Q2 at a commanding 62.1% of the market, levels we haven't seen since late 2020. That's an eye-catching 7.6% point increase since the beginning of the year, clearly signaling the market's preference for BTC over altcoins during periods of uncertainty. It's worth noting, though, that this figure is significantly lower than the number shown on TradingView, which instead indicates that Bitcoin dominance closed the June monthly candle at around 65.2%. The discrepancy might come because CoinGecko counts wrapped Bitcoin and TradingView doesn't, but either way, the broader trend remains clear. Meanwhile, Ethereum dominance inched up slightly to 8.8%, recovering from Q1's painful lows. Further down the food chain, stablecoins and large-cap altcoins were largely flat or even lost ground slightly, while the others category of smaller altcoins continued shrinking, down 2 percentage points to 13.7%. Now, what's also interesting is that the correlation between crypto and traditional markets tightened in Q2. Bitcoin's correlation with the total crypto market cap rose to 0.99, which makes sense considering how closely altcoins typically track BTC's moves. Crypto's correlation with the S&P 500 also climbed to 0.90, up from 0.85 in Q1, suggesting that crypto has been significantly influenced by the same broader macro and geopolitical factors affecting equities in the recent months. While volatility within crypto eased a bit, it spiked in traditional markets due to tariff-related uncertainties and geopolitical tensions. Notably, the S&P 500 volatility almost doubled, highlighting just how much market madness we've experienced recently. And by the way, if you're enjoying these juicy insights and want to stay ahead of the curve, then go ahead and smash that like button and hit subscribe. Also, don't forget to ding that notification bell so that you don't miss our next upload. Next, the report digs into Bitcoin, because as you all know, there's crypto and then there's Bitcoin. Q2 was quite the ride for BTC holders. Following a brief but dramatic plunge early in the quarter, triggered by President Trump's tariff showdown, BTC found its footing at just over $76,000 on April 9th. After bottoming out, the orange coin staged an impressive recovery that juiced it to a fresh all-time high just above $111,500 on May 23rd. But the momentum didn't quite last into June. BTC spent the remainder of the quarter consolidating, closing Q2 at around $107,000, still clocking in an impressive 29.8% quarterly gain. Interestingly though, average daily trading volumes continued their downward slide, falling 30.8% quarter on quarter to around 32 billion per day. This echoed the broader trend we mentioned earlier, which was that prices were rising, but retail traders still appeared hesitant. However, looking at charts today, BTC has already sliced through these previous levels like butter, hitting a new all-time high of over $122,000 in July, which may have even been surpassed by the time that you're watching this. And while BTC appeared to be riding an unstoppable dominance train, despite a flood of new altcoins continuously hitting the market, recent stats indicate it might finally be taking a well-deserved breather, down nearly 7% from its recent highs at the time of filming. Now, turning to Bitcoin's institutional adoption, publicly listed companies continued stacking BTC as a treasury asset. Inspired by Michael Saylor's strategy, which still held the lion's share at around 70% of total corporate Bitcoin holdings, other notable entrants jumped into the BTC bandwagon. 21, a newcomer backed by heavy hitters like Tether, Bitfinex, Cantor Fitzgerald, and SoftBank, became the third largest corporate Bitcoin holder, accumulating over 37,000 BTC in just a few months. And this corporate Bitcoin narrative wasn't limited to the US either. Companies internationally also started piling in, notably Japan's Metaplanet, now ranked 7th among publicly traded BTC holders. Despite this excitement, however, not everyone jumped on board, notably tech giants like Meta, Amazon, and Microsoft, who firmly resisted calls to include Bitcoin on their balance sheets. But hey, crypto seems to be doing just fine without them, so their loss, I suppose. Those who did join the Bitcoin party, though, seem to be enjoying some pretty juicy gains, as BTC comfortably outperformed both the Nasdaq and the S&P 500 by well over 10 percentage points in Q2. Moving on to ETFs, Q2 was another strong quarter for US spot Bitcoin ETFs, with net inflows surging sharply to nearly 13 billion compared to just around 900 million in the previous quarter. BlackRock's IBIT ETF led the charge, capturing the lion's share of these inflows and solidifying its commanding lead with a 51% market share by assets under management. Grayscale's GBTC, on the other hand, continued losing ground, experiencing the largest outflows in the quarter at over 700 million. And finally, Bitcoin mining broke new ground. Hash rate surpassed a historic milestone of 1 zettahash for the first time, reflecting ongoing massive investments in Bitcoin mining infrastructure. Major players like Bitmain unveiled new rigs. Eric Trump-backed American Bitcoin raised hundreds of millions to mine BTC, and even Pakistan dedicated gigawatts of its state electricity to support mining operations. In short, despite declining trading activity, Bitcoin's fundamental and institutional narratives remain stronger than ever in Q2. And if you want to take advantage of this momentum, then you'll have to check out the Coin Bureau deals page. That's where you'll find sign-up bonuses of up to $100,000, trading fee discounts of up to 50%, cash backs on deposits of up to 75% on the top crypto exchanges. Now remember, these deals, they won't be around for long, so take advantage of them ASAP by using the link down below or the QR code on the screen. Okay, so next the report moves on to Ethereum. And it's probably no surprise to hear that ETH holders had a particularly rough start to 2025. ETH dominance had dropped sharply, reaching lows not seen since late 2019. and its price struggled to gain meaningful momentum. Thankfully, in Q2, Ethereum finally started clawing its way back. ETH rebounded by an impressive 36.4% in Q2, outpacing Bitcoin's own recovery. It climbed from around 1,800 at the start of April to close out June at just under $2,500. Today, Ethereum is sitting just a few $100s shy of the almighty $4,000 mark. Not too shabby. This has also been reflected in Ethereum's dominance chart, which, to the relief of many ETH holders, has staged a remarkable recovery over the past month. But even though the price recovered significantly, Ethereum's daily average trading volume actually dropped from around 24 billion in Q1 to less than 20 billion in Q2. This discrepancy could hint that institutional players were quietly accumulating ETH over the counter, not on exchanges. On-chain activity told another story, however. Average daily transactions on Ethereum picked up slightly, rising to around 1.3 million per day in Q2 compared to 1.2 million in Q1. What's particularly encouraging here is that this uptake came alongside a continued decline in average gas fees, dropping sharply from 6.9 Gray down to just 3.5. In other words, Ethereum transactions became cheaper and more efficient, largely thanks to the successful rollout of the Dencun upgrade. But it was a completely different story within Ethereum's broader ecosystem, which faced fierce competition. Binance Smart Chain surged substantially, overtaking Base to capture nearly a quarter of all transactions within the EVM ecosystem. According to CoinGecko, this surge was largely driven by Binance Alpha's points campaign, which ignited activity on PancakeSwap and related DeFi protocols. At the same time, newcomer Unichain exploded onto the scene, quadrupling its transaction volumes to become the sixth largest chain in the EVM ecosystem, just behind Arbitrum. Meanwhile, the ETH ETF scene underwent a shakeup. US spot ETH ETFs saw strong inflows totaling 1.8 billion, with BlackRock's ETH-A overtaking Grayscale's ETH-E as the leading Ethereum ETF by assets under management. Interestingly, ETH-E experienced net outflows of nearly 138 million, the only ETH ETF to suffer a decline in the quarter. But despite ETH-E's struggles, the broader Ethereum ETF narrative recently kicked into an even higher gear, attracting over $1.85 billion in inflows in a single week at the end of July, following a massive $2.18 billion the previous week, surpassing even Bitcoin's inflows. The next part of the report shifts gears to Solana, which got absolutely battered by meme coin scandals and political rug pulls at the start of the year. Back then, the Trump-Melania Libra meme coin debacle left Sol licking its wounds, driving prices sharply down towards the psychologically critical $100 level. Fortunately for Sol holders, things took a more positive turn in Q2. Although Solana initially struggled, the network staged a solid recovery in May, reaching a quarterly high of roughly $184. Much of this momentum mirrored Bitcoin's rally, as improving market sentiment and rising ETF approval odds offered fresh hope to investors. Sol ultimately closed the quarter around $153, still making a respectable 22.4% quarterly gain. At the time of recording, Sol is trading very close to the $200 mark, making for quite an impressive recovery. Now, one might naturally expect this price action to reflect rising trading volumes. But as was the case with Bitcoin and Ethereum, average daily volume on Solana actually dropped sharply by over 24% from about 5.9 billion in Q1 to 4.5 billion in Q2. However, Solana's network activity remained vibrant, holding on to the title for most active addresses among all major blockchains, increasing nearly 20% this quarter alone. The big news, of course, was the approval of the very first US-based Solana ETF at the end of June, the Rex Osprey Sol Plus Staking ETF. Though it's worth noting that this ETF launched under different regulations compared to the other pending spot ETF applications from the likes of 21 Shares, Van Eck, and Fidelity. On that note, the regulatory wheels began turning even faster, with the SEC unexpectedly pushing issuers to refile their crypto ETF applications much sooner than anticipated. Originally due by October, the SEC, now on in paperwork, completed ASAP. It's no surprise then that Bloomberg senior ETF analyst James Seyffart said he expects a quote, wave of new ETFs in the second half of 2025. And if you're curious about which other altcoin ETFs might soon be heading our way, then be sure to check out our dedicated video on that topic right over here. The report then shifts its attention to decentralized finance, or DeFi, which was deep in the red back in Q1, with heavyweights like Uniswap's Uni and Aave taking a serious beating alongside Ethereum's plunge. But in Q2, the narrative shifted significantly, thanks in no small part to the President Trump's regulatory rollback, which repealed certain IRS reporting rules that had previously held back the DeFi sector. The policy U-turn coincided perfectly with Ethereum's recovery and the broader market upswing. As a result, the total DeFi market cap bounced back impressively, from lows of around $72 billion in April to a quarterly high of $128 billion. By the end of June, the sector was comfortably sitting at $115 billion, marking a substantial increase from Q1's $96 billion. But, and there's always a but, despite this price recovery, DeFi continued to lose ground relative to other crypto sectors. DeFi's share in the total crypto market actually declined slightly from 3.46% in Q1 to 3.34% in Q2, suggesting that sectors like meme coins and AI were still attracting investors' attention more than DeFi's utility-focused applications. In terms of total value locked, or TVL, however, DeFi had a much better showing. Overall, multi-chain DeFi TVL surged by a healthy 27% quarter over quarter, reaching nearly $162 billion by the end of Q2. Ethereum, boosted by the Pectra upgrade that sent ETH prices soaring, once again increased its dominance, reclaiming over 60% of all DeFi TVL. Solana also managed a modest gain in market share, while newer chains like Hyper EVM saw explosive growth. Its TVL skyrocketed fourfold to $1.8 billion within just a single quarter. And within DeFi, certain sectors stood out. Cross-chain bridges and lending platforms both saw their TVL surge by over 40%, driven by rising demand for leverage and cross-chain trading. Real-world assets also continued gaining traction, with TVL climbing nearly 40%. But perhaps the most surprising story was Coinbase's CBBTC, a Bitcoin-backed token that saw a 71.5% increase in TVL, thanks largely to enhanced transparency through Chainlink integrations. Conversely, older bridge protocols like Stargate took heavy hits, shedding nearly 90% of their TVL as users flocked to Circle's new cross-chain transfer protocol. And finally, the report moves onto NFTs and exchanges, two sectors that saw starkly different fortunes in Q2. Starting off with NFTs, according to CoinGecko, NFT trading volume plunged substantially this quarter, down more than 50% compared to Q1. Ordinals and Bitcoin-based NFTs were hit particularly hard, with trading volumes collapsing by a staggering 90.6% between March and April alone. Ethereum NFTs didn't fare much better, losing around 25% in volume and slipping below the $100 million monthly mark. Meanwhile, NFT marketplaces experienced an equally painful quarter. Total volumes across major platforms dropped roughly 65%, falling from $1.8 billion in Q1 to just over $640 million in Q2. OpenSea's highly anticipated V2 release provided a minor boost, but trading volumes remained muted overall, down nearly 73% from February's peak. Magic Eden took an even bigger hit, shedding a stunning 95% of its volume, as the market for Bitcoin NFTs and ordinals cratered. NFT lending also fell off a cliff. Monthly loan volumes plummeted by over 70% quarter on quarter. Blend retained its near monopoly on the NFT lending scene, but even its numbers weren't pretty. Switching gears now, crypto exchanges presented a mixed picture. Spot volumes on centralized exchanges, or CEXs, dropped noticeably by nearly 28%, despite the broader market rebound. Crypto.com was hit particularly hard, seeing its trading volume shrink by more than 60% and dropping from second to eighth place among the top centralized exchanges by volume. Binance, though down slightly, maintained its dominance with roughly 38% market share. Decentralized exchanges, or DEXs, on the other hand, flourished. Trading volumes on the top 10 DEXs surged by over 25%, hitting a new all-time high of nearly $900 billion. PancakeSwap in particular stood out, with volumes increasing by over 500% due to Binance Alpha routing trades through it. Binance Smart Chain overall emerged as the dominant chain, capturing a remarkable 2/3 of total DEX volume by June. Perpetual exchanges painted a mixed picture. Centralized perps exchanges saw a slight 2.3% decline in volume, continuing their downward trend. Yet, decentralized perps defied gravity, setting a new all-time high in both volume and open interest. The one on everyone's mind, Hyperliquid, of course, remained king, capturing nearly 73% of DEX perp volumes and even surpassing many centralized competitors. Now, I could keep bombarding you with juicy stats from CoinGecko's latest report all day long, but I think that's enough number crunching for today. Like we hoped for in our Q1 coverage of this report, crypto markets finally staged the swashbuckling comeback we've been waiting for. Bitcoin and Ethereum found their footing again, DeFi enjoyed some much-needed regulatory breathing room, and DEXs proved that decentralization is still crypto's beating heart. Sure, NFTs and centralized exchanges stumbled, but this market always keeps us on our toes. As we move further into Q3, there's a decent chance that we are on the brink of entering into the most crazy part of the crypto market cycle, and that this attention will start shifting from BTC to the rest of the crypto market, which is already evidenced by the failing Bitcoin dominance chart. So let's hope that we'll be back with even better news in our Q3 roundup in a few months' time. But whatever happens, we'll be here to guide you every step of the way through these turbulent crypto waters. And if you want to learn how to spot altcoins with massive potential in this market, be sure to check out our dedicated video on that right over here. And if you haven't subscribed to the channel yet, you can do so right over here. So thank you so much for watching. I'll see you again very soon. This is Lewis, signing off.